The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And this is Dave White. And another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And kind of an interesting day. I suspect we're getting ready to take rather a breather for the next couple of days as volumes go incredibly light. And we wait with bated breath. That's right. I put a worm on my tongue. I've got bated breath, and we're waiting for the FOMC meeting for Wednesday. And I suspect that we're going to be in rather a tiny trading range. Probably going to start selling off early tomorrow morning a little bit, not much. I'm expecting us to go into the FOMC meeting at somewhere around 1950. The belief is going to be that the Fed is going to throw yet another ton of cash out the back of helicopters, and they probably won't get that or much change or any change between the statement we had last time and this statement, and that should be it. And without a lot, we're probably going to see the market pull back a little bit, at least. That is my belief at the moment, but I think we're going into kind of a quiet time, a little timeout over the next couple of days. Probably going to see some action on Wednesday. And then when we see that the Fed is continuing to of course, pull out all their cash for the QE. The whole question is going to be, when do they start raising rates? If you've listened to me before, you've heard pretty much all the academics say that somewhere around 30% of the S&P earnings right now is because of ridiculously low interest rates, basically free. You put those interest rates back in, and of course, earnings are going to be down 30%, and that's what we have to look forward for. Of course, the Fed is all about trying to let the air out only at the rate that the economy comes back so that we don't have any big move down. They want asset prices high, but not in a bubble. They don't want them to go lower, and they sit there and jawbone this market to try to hope to hold it up somewhere around these levels and let the economy over the next 2 or 3 years continue to pull up to it. Now, the problem with that is who wants to sit around for a market that's going to go sideways at best and probably down at worst? And that is the problem. If they don't have any more profits, why don't you just cash out now, put your money in the bank, and wait? And if everybody had the same idea, you'd be nuts to have a different one. Little catch-22 reference there for you folks in Lutz, Florida. But we shall see. Anyway. So we're off, 5 points on the S&P cash. Kind of playing around here. Volume 2.16 billion shares, so kind of an average day out here, but we've been seeing this volume pull back now for 3 straight days, and my guess is that we're probably going to come in tomorrow at 1.8, and we're going to be right back to where we've been, which is you get up to this level about 1960, 1950, and everybody wants to buy pullbacks. No one wants to buy a breakout, and you have this kind of Mexican standoff of people wanting to drive the market higher, but no one wanting to buy it. Kind of like everybody, the old saying that everybody wants to go to heaven, but no one wants to go right now. That's kind of exactly what everybody is doing out here. Everybody, the market's going higher, but I'm not going to buy any higher. This is fine. I got my position, but I'm not going to buy any higher. So we've got to kind of a look at that, and we shall continue and persevere, even though light volume is all around us. On this day in 1978, the Humphrey-Hawkins Act is signed into law. there was some other horrible stuff that I think's been thrown away over the years. The only thing that really continues to move the market is, of course, in 1978, the Federal Reserve Board chieftain, the Chief Mucky Muck, if I get too specific here, let me know, has to come in front of Congress twice a year. And, of course, we get some just incredibly boring testimony and denials, but at least we get somebody, and maybe we have a Ron Paul that'll ask a question with a pithy answer coming from a Fed official. But it is rarely that we do. But this year we had to move the market at least once, and we'll continue going on. I had a couple of emails over the weekend, and I think a lot of people continue to think that technical analysis is a end-all to be-all. It is one of the best tools I suspect you can get, especially beginning as a trader, when you are easily swayed by news, and we'll talk about just how bad news is and what happens when they are wrong. But there's a great 2 paragraphs or so in a thing called Aliens Caused Global Warming. It is a kind of an opinion piece that the author of Jurassic Park and a lot of other books and movies put out, Michael Crichton. But in this one paragraph, I think we all think that we know everything. Or we like to think that we know everything and got a good beat and everything. But everything that we, and I am probably one of the offenders on this, but we tend to think that we know it all. And, maybe there's something out there that's unknown. But if we just look at the last 100 years out here, if you were born in 1900 and you plop somebody down here today, they didn't know what a radio was, an airport, or a movie, or a television, or a computer, or a cell phone, or a jet, or an antibiotic, or a rocket, or a satellite, or an MIR, or ICU, an IUD. They didn't know what IBM was, an IRA, an ERA, an EEG, an EPA, an IRS, a DOD, a PCP, HTML, or Internet. They didn't know what interferon was. They didn't know what an instant replay was, remote sensing, remote control, speed dialing, gene therapy, gene splicing, genes, spot welding, heat-seeking missiles, bipolar disorders, Prozac, leotards, lap dancing, emails, tape recorders, CDs, airbags, plastic, explosive plastics, robots, cars, liposuction, transsuction, superconduction, disc antennas, step aerobics, smoothies, 12-step programs, ultrasound, nylon, Rylon, Teflon, fiber optics, carpal tunnel syndrome, laser surgery, corneal transplants, kidney transplants, or AIDS. So there's always the things that we don't know, and I try to make up for that. But there's something even worse, and that is the things that we think we know better play first and wrong. And kind of interesting just to see the press in the last few weeks out here. But I thought it might be willing to bring up a few things. Of course, truth doesn't really matter when you're pummeling somebody you don't like. And, of course, how many people were raped or killed or hurt or went hungry in the Superdome? The answer was 0. You would think that it was the episode of The Walking Dead during Katrina, a horrible thing. But it was more important to make political points, and we had morons like, what's that guy, Shepard Smith, yelling and screaming, and of course, on something that they had no idea of, but were hearing rumors about and yelling and screaming. But guess what? No rape, no killed, and everybody had water and food. Horrible thing that happened, but didn't matter because a political agenda was out there. In 2008, how many times did I hear some moron say peak oil? If I was president today, I would make a law that said you could go out and beat anybody that said peak oil with a shovel as hard as you want. Just you could also tie them to a pole with duct tape and then beat them. But these people didn't know anything more about it. They had an agenda, and need I say more? Of course, probably the biggest lies of the last 10 years was that there were no mass weapons of mass destruction in Iraq. And don't really hear anybody taking a lot of apology tours on this one. They had 550 tons of uranium that was taken out in 2008, given to, of course, our neighbors in the north to actually sell that uranium, CCJ, if you're following that. Interestingly enough, since no one has bothered to bring it up, I am going to. 0.5% of all that would be would yield 235, which is what you need to make an atomic bomb. All the plans and all the tubes and everything was there as soon as Saddam wasn't being looked at on a daily basis. He had all the documents and they were ready to go. It would have taken him from the day he started 331 days to get to 80 to I think 70% grade uranium-235. 37 days after that, it would have been about 85%. 8 days after that, he would have had enough material to make 150 Hiroshima bombs. Now, that would have been taken over time, but in less than 1 year, he would have been able to make an atomic bomb at about 112 pounds per bomb, and that is a horrible bomb. You can make one for half that now. But everybody says there was no weapons of mass destruction. There was certainly huge amounts of stuff. Last week we found out because, of course, a lawsuit from troops that they had taken out roughly 5,000 chemical warheads. Most of those were 152 millimeter sarin rounds. Interestingly enough, also, they were buried out in the desert, but they were also, there'd be 100 rounds in a storage facility. 2 of those rounds would be sarin rounds. They mixed them up with regular rounds, and when people were stealing these to make roadside bombs, half the people that were making roadside bombs were killing themselves because they were picking these sarin rounds out of the other ones. So next time someone says that a bunch of people were killed in the Superdome, that it was peak oil, that there were no weapons of mass destruction, I think 150 Hiroshima bombs qualifies as mass destruction. I also think that 5,000 chemical warheads probably does. Now, what's interesting about the article from last week that was on page 25, because no one wanted to admit that they were wrong for the last 5 or 10 years on this deal, was that this document was heavily redacted. All we know is just the cases where these people are suing about. According to unknown sources, at least they weren't in the article out there, they thought that there may have actually had up to 20,000 chemical warheads in Iraq. Just imagine what ISIS would do with those. Anyways, there's the things we know that just simply aren't true. There are the things that we don't know because they haven't yet, and we don't know that we don't know them. But just a thought for today. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, you can always call me at 877-927-6648. You can post a message in the den, or you can be like Wayne from Texas and ask, are there any confluence levels on the SPYs? And the answer is there's a beautiful one, and one of the reasons why I bought all those calls midweek during expiration and cleaned up a big time. And that is there is a beautiful one. It is 184.48 to 184.26. So you got about 30 cents out there. You couldn't ask for a better one. It's not uncommon to see exactly what we see, which is a pierce of a level like that, and then an instant bounce. But if you're going to play them, they certainly are there. Now, normally what you do is the first time you come down, you're going to bounce off of that if you don't have huge volume. Well, we had huge volume at that low, which is now telling us that we're going to go back and test that area, which I think is 1822 on the S&P cash. And so we're probably going to come back and at least hit that one more time. And the more times you hit it, the easier it will break. We got pretty much our bounce and just about everything you could think of that we should get from this after coming down on such huge volume. But if you're looking at my power law vector indicator number, you may also want to look at this, which is normally you get 3 moves up to a top. And if you take a look at what we're looking at now, it's at November 16th, 2012. Starts the first leg. It ends on May 22nd, 2013. But when you look at the energy underneath it, I have my own power law vector indicator number here that shows the energy. The first leg, 25. The second leg, 21. This last leg, 17. That's probably the best you can hope for is a trading range. And but we've seen the energy really come off 3 times out here. And if you're not familiar with my work on the power law vector indicator number, it is putting together price movement, volume movement, and time into one signal showing how much energy was out there. And it's not much different than the way you get charged for electricity. You use a whole lot for 5 minutes, probably not a lot. You use a whole lot like an air conditioner summer long, you'll have electric bills like me. So anyway, it's all about price, volume, and the movement in there. And this is pretty much what I look for in the top. Why I was short up here at the top and why I am short today. It will probably come down here. Now, normally what you're going to see is that these confluence zones, even in strong markets, will probably, they get gapped over. It's probably not going to go down there and just like tap on it if it's going to hold. It's probably going to just jump over it one morning, and that's why I suspect that the next move in this market is probably going to be down a little bit, and then we're just going to gap down. We're probably going to gap down right through that 1822 level on the S&P cash, and it may take a month to meander back down there. In fact, all the calls I have now are December calls. I wouldn't be playing anything in the next week because I have a feeling it's going to be a little tough. But you can always give me a call to Be Like Wayne, and give me a call at 877-927-6648. Other things of interest out here. Let's go back to our, I think, how do I get that back up? There it is. Interestingly enough, in the internet space, the Elections Commission, one of the chairpersons, I guess, Ann Raviel, announced plans to start going out and winning regulations on internet-based campaigns and videos, currently free from most of the FEC rules. And I'm unclear why something that was free is suddenly a problem with these folks, other than the fact that maybe she wanted to join the Hitler Youth or something. I have no idea why anybody wants less free speech out there. I'm always a fan of more. I'm not one to close down political opponents or even those cable stations that broadcast news I don't like. As long as they're not threatening to kill anybody and they're not defaming anybody or libeling them where they could get sued, I don't see any problem with it. But there are a lot of people, especially political people these days, that are tough. Apple is in a heap of trouble on their Apple Pay. We had a bunch of people back out of it over the weekend, including Walmart, CVS, and Rite Aid stores. And everybody's just kind of whistling past the graveyard in Apple shares today. It's no big deal. They'll eventually bend to the will of Apple. Is kind of what they're thinking. We'll talk more about this when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to continue talking a little bit about Apple Pay. We've got a member of the Den in high standing asking a question about how it works. And Apple Pay is a very interesting idea in the fact that it is a one-time pad, if you want to talk about cryptography, a one-time pad way of paying for things. So a very interesting idea in the way this works, and you use your smartphone as the key. So not a bad idea. The problem comes in with Apple's history. And Apple wanted to get into the video business. Apple wanted to get into the streaming audio business. Everywhere Apple goes, what they've done to the business of music follows them. And no one wants to be basically stuck with the way Apple is going to either treat you or the way that they can stick it to you if they don't like it. And why a few of these companies have gotten involved, almost all these retailers have their own alternative system that they are part of. It is called the Merchant Customer Exchange, MCX, led by Walmart, and also a big partner is Best Buy in this. But I think a few of these people just signed up for it and then decided to quit using it, and they're probably going to figure out what they've learned out of Apple and probably put it in it. But CVS and Rite Aid stores were already part of this MCX deal, but Walmart is actively opposing it. I suspect, for the reasons I mentioned before, you know, Apple couldn't get a streaming service going because no one would sign a deal with them. In fact, a lot of people were told if it's Apple on the line, just hang up in the music business because no one wanted anything to do with them. They bought Beats Music primarily to get into that space because Beats already signed all the agreements. Those were not cancelable if they were sold to someone else. So Beats kind of the stalking horse, if that's a correct analogy for that. But none of these people want to be beholden to a certain individual. They would much rather have their own system and say, okay, Apple, you can be a part of it. That's fine. Android 2, Windows phones, it's great. But what we're not going to do is allow one big retailer of smartphones to say what you can and can't do, because once they own the market, how are you going to say that you can't be part of it? What happens when Apple wants to raise rates and start charging 0.5% on every sale that comes through your smartphone? And what has never been signed, and Apple won't agree to, is in perpetuity that they will not charge a dime from retailers. And I think it's pretty smart for the retailers out here to not get stuck in something that they can't get out of, and or create a monster like Apple did with iTunes that destroyed an industry. You know, there was always the whole idea that people were going to download illegal music anyway. That wasn't so much of it. It is that if you stream or you download for iTunes, instead of selling an album at $15, you're selling one song at 99 cents. And that is basically crushed the music business, and why it may be a great thing for customers to have something like Apple Pay. The thought that one day you could be Walmart and Apple would just say, hey, we're not supporting Walmart because they won't pay us 0.5%. It all sounds good and wonderful right now, but what you can't do is be stuck. I think most of these retailers already know how bad they're stuck by dealing with MasterCard and Visa. And the rates that they pay to those guys, which they probably think are confiscatory also. So the whole idea is two things. One, I've seen huge ads in both the audio or not the audio, but the music industry, and the things like Variety that go after the Hollywood crowd. And a lot of these things are basically warnings, dire warnings of getting in bed with Apple. And my guess is that CVS, Rite Aid, and some of these other guys were just getting in to see what was going on, how it worked, and decided to back out, and they were the companies to do it. There may be some other reasons that they did this so quickly, but my guess is that they didn't want to go too far down this rabbit hole of getting in bed with Apple. And having Apple decide where you would shop on whether or not you could use their phones or not. As far as I would believe, none of these places would want to have a Apple system without also having an Android system at least, or some other way. You can't have, well, look at GTAT going bankrupt here in the last few weeks. It is more a cautionary tale to get in it, and we've used this analogy before. That is, if you owe the bank $100,000, the bank owns you. If you owe the bank $500 million, you own the bank, and that is the problem. Who owns who? Always a hard thing to get in, and if Walmart leads the charge, my guess everybody else will follow for these retailers. But of the people really pushing it, Best Buy and Walmart seem to be the main proponents of this MCX system, and why I was not really too excited about Apple Pay to begin in the beginning, and that is because there was no door that could be shut once they became so embedded in a system that you couldn't get them out of it. And until Apple basically signs something that says that they will never charge retailers ever, it's going to be hard. I think they wanted to see what Apple had to do and see how tough it would be. And now they're going to go over and do it with MCX and themselves, it looks like. FINRA announced today that it had censured Merrill Lynch It's professional clearing corporations for $3.5 million. We talk about it every once in a while. There's rules for them and there's rules for us. But basically what they got was their hands caught in the cookie jar over the last few weeks, going in and doing naked short sales. And from what I shortly read, there wasn't a lot of details. Looks like maybe they were pushing this market down only to try to buy it last week. But anyway, there's got to be borrowable shares, and they just don't care sometimes. But FINRA slapping their hands, my guess is they made more than the $3.5 million that they got fined. But at least we know that there's rules for them, and there are rules for us. Anyway, after the bell tonight, this is from last week, isn't it? No, this is tonight. But I don't know why Buffalo Wild Wings is in here. After the bell, Cliffs, Natural Resources, Twitter, Universal Health Services, and Crocs are after the bell. My belief is that Twitter will probably just come in line. I don't see a lot of upside or downside in the charts and or the options. Cliffs could be kind of interesting to see what they say about it, but boy, it's got to look bleak around there if you're in that business. But we'll look at it. I'd like to see what UHS has to say about healthcare. We've seen a lot of movement in that sector fairly lately, and we'll continue to do that. Is there anything else? I know a lot of people trade commodities, and of course there are a lot of dire predictions about the end of the world. And just a few years ago, we were going to be scorching. But in recorded history, at least in the United States, we've had the coldest summer of all time. And not just by a little, but by a huge lot. Hopefully you're watching this chart. If you want a link to it, just email me at path@tfnn.com. I'll be glad to answer your questions and send you the details on it. The other thing is I think we're going on to 3,700 days without a major hurricane in Florida. And, of course, after 2005, wasn't it there was going to be nothing but constant hurricanes from then on? Prediction business is pretty tough, whether it's in the stock market or somewhere else. Interestingly enough, there's some of the coldest winters or coldest summers on record. What a sweet. If you missed the first part of the show, we've got a beautiful confluence level down at 184. My guess is that we are setting up the ABC down right now, and we're going to get down there and hop over that thing one day. We'll probably be down like, I don't know, probably something like 186 or 187, and wake up and just gap over it. That's normally the way after the first time you bounce off these confluence levels. The next time you come down there, sometimes you'll bounce off of them, but most of the time you skip right over them and jump the creek, as it was said. We've got a lot of stocks out here moving. We're going to go through the movers here today as we watch probably volume kind of tick down over the next couple of days in the FOMC meeting. My guess is that we start seeing volume really drop about 10:30 in the morning and non-existent Wednesday morning until we get our answer, which will be no surprise Wednesday. So kind of be a light trading over the next couple of days. Let's go and take a look at what's going on here in the markets. Banco Brazil, BBD, the symbol. Here's a good example of a confluence level that you just hop right over on this one, and that just gapped right over it a few days ago. The real message out here is the commie babe that was running for president yet again, and basically talking about nationalizing a great deal of companies down there. Seeing a little pressure, broke through the previous low on BBD from October 1st with 13 million shares. We're well underneath it with 21 million shares already today, and it's trying to claw back a little bit. But I think we're going down the road of Venezuela here fairly quickly with Brazil. And, of course, PBR, Pabst Blue Ribbon, for Petrobras, if you're in the stock market, down testing the previous lows and certainly blowing away all kinds of volume down here. We still have another 60 cents to the low of March 17th, but there's absolutely nothing going in the favor of Petrobras. Nationalization could be a real and present danger for any company in Brazil now, as we have someone take over. The only probably worst thing is we have politicians in the United States actually saying worse things than this gal in Brazil. Over the weekend, a brain donor politician said that corporations don't make jobs. And how far and delusional do you have to be from reality to actually see that? But I digress. Anyway, Halliburton kind of ugly today and down. Let's get a little shorter time frame out here. Volume picking up again from Friday, but not that bad. Certainly it looks like all these energy stocks want to go out and test these lows. Not much movement on gold. On crude, we're at $80.87, and certainly looks like we want to go back down one more time and just see how low is and play crude limbo. Maybe down to 78 or 77 bucks is what most people are looking for. So not that much farther down, but people already looking at whether or not they're going to curtail production in the crude markets. But Halliburton getting a downgrade and some other bad news out here. Looks like with the volume we get today, going to go test that $48.17 low out from October 15th. Heartland, which is, I think it is a shipping company, isn't it? This one has been trying to bust out. Pretty good indication that it could not, even with lower, I'm pretty sure, let me make double sure. Yeah, it's a trucker company. How can you see 60 cents downside on diesel and not blow out the tops out here for the single biggest expense they have? And that's because rates are pretty much done every week. You call up if you're a broker, if you want to move a bunch of stuff, and whoever gives you the best bid gets the job. And, of course, as prices come down and fuel, those jobs actually come down in price. Fairly quick reaction to the marketplace. Anyway, Heartland had a major signal out here from the September 19th high that had 1.5 million shares. Tried to break it on the 21st and 22nd with 500,000 and 400,000 shares. Of course, a huge down day just 2 days after that on volume and kind of bouncing around down here at the lows. But certainly when we look at a lot of these, interesting. When we get back, we're going to talk about MU, Micron. They're going to do a little share buyback. It's got a little juice into it today. But fairly decent retracement out here. But they're going to try to prop this thing up, and we'll talk about distribution when we come back. Email me at 877.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, Parsley Energy, PE, this is down here and kind of pierced the low today. We've got a couple other companies like this. Right now, the S&P cash is off 5 points, and we've got 2.44 billion shares. So again, volume starting to drop off. I imagine we're going to see that over the next couple of days as we go into the FOMC meeting. Other stocks, mid-cap losers out here today. PTEN. This one downgraded to neutral at Goldman. They don't like this one at all. Certainly has a high volume low. So Patterson UTI Energy looks like it wants to come back and test this October 15th low at $21.06. Volume really not picking up out here, but just about $1 lower to start looking at this one. PDS is another one out here. Off almost 8% earlier. precision drilling, all these drillers out here. Volume, though, not as close as it was last week as we were pounding the lows. So some of these may be getting ready to put in a low. October 15th, you had 6.3 million shares at $7.94. You came about 4 cents. You like that to get pierced all the way and see a lower low. So just 4 cents lower. Maybe we'll see it in the next couple of days. As long as the volume remains light out here, you might have a temporary low in some of these other stocks. And what else do we have? Tesla. I didn't see what the news was, if anything, on Tesla. Let's take a look at that one real quick. Certainly down and the volume picking up today. Toyota cuts stake in Tesla. Lower sales. Looks like the last month weren't that strong. And they've got a lease plan, and it's tough to short. But kind of interesting to see Tesla didn't have much of a bounce out here. We thought maybe this thing would at least get back up to this gap. I would have liked to seen 255, and I might have pulled the trigger on the next ABC down here. Certainly looks like this is getting into the 217.32 low from October 15th. You need 9 million shares. You got 7.5, so I think you're going to get it today. It's probably not going to bust that low, but maybe we're going to get that light volume next couple of days, so maybe it's Wednesday or Thursday. Maybe this thing continues on down. But one of the easiest stocks to say that it was horrifically overpriced would be an understatement. UPS also out today, and I think not a bad deal. This thing had a real, basically if you want to talk about some tuning fork movement out here, UPS certainly has done it. This thing is trying to come back into this gap that happened on July 29th with almost 9 million shares. This thing gapped down. Tried to get into it on Friday up here with 4.2 million shares. Today, 2.6 million shares. So they're really trying to push this back up. And, of course, lower prices for fuel should be a boon to UPS. But kind of hard to see what was going on in that. WPZ, anything else we want to look at out here? Williams Partners, Heartland, NBG. Let's see if there's anything out here. Pay. Verifone Pay Systems, a nice little bounce out of this. Looks like it wants to try to get up to the $37.64 high from September 11th. But what do you got? Another buck to go here, $1.50. Decent volume, kind of selling off from the highs, though. So we'll watch that. Energy's actually fairly good off this low for Verifone Pay Systems. Anyway, remind yourself to sell when you can, not when you have to. And join us again tomorrow. Same bat channel, same bat time for another excellent edition of the Power Trading Hour in Need.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.